How's it going, Abror? How are you today?
Yeah, I'm all right. I'm all right. How are you?
I'm doing great, thanks. Weather is starting to pick up
Yeah,
positively
yeah.
here in the UK, which is awesome. So yeah, I'm doing really well.
It's not depressing anymore.
It's not depressing anymore. Are you here for summer? Are you headed back to
Yeah, I
Uzbekistan?
think I will be here for the summer as well. I might go for a week, but I haven't decided yet. There is no urgent need to go there, but yeah, let's see. I'm likely be here for summer.
Okay, perfect, perfect, perfect. That's exciting. Me, you, and Tom, the band, can be back together.
Yeah. Yeah, we'll discuss the market, come up with some plays, and yeah,
Yeah, meet up with some more inner circle clients. We'll have a good time.
yeah.
So yeah, very exciting. Let me just drop in the meme coin channel. We are live at everyone. Use this as a chat if you like. I've got it open. Okay, perfect. So yeah, bro, let's dive into it. Let's go. Bro, crazy market. Things are very tricky right now. We still have the geopolitical chaos. Macro looks tricky. We, as a company, have kind of gone out there and said, look, we're sitting on our hands for the most part, for most people, especially investors. But there is absolutely opportunity if you are willing to trade. Now, I myself am not a trader. That's not what I do. But this is a trader's market. So even for me, I'm getting in myself. And I guess the goal here is to look at what we can short. We've been very vocal about we believe these quick push ups are like relief rallies, and we've done a pretty good job of catching them and capitalizing. But let's talk some shorts. There's a lot of bullshit out there, some terrible tokens. We went over altcoins 2 weeks ago and we went through the tier list and listed everything we think is a pile of garbage. And yeah, I guess there's a lot of shorts to be done, my man. So let's go, dive in a little bit, give some context, and then let's look to discuss some
Yeah,
shorts and look at what we're going to place. And yeah, of course, get people up to speed too. There's going to be a lot of people who are like myself, investors, maybe they don't trade, maybe they know buy and sell, but they don't know long and short. So let's dive in. Bit of education and then some practical plays. We'll look at some charts too.
yeah. Um, I think I will start with explaining what is short. Essentially, shorting means like betting against the market. So the way it works is that you borrow an asset that you believe will go down in value. You borrow and sell immediately. And then when the prices go down, you buy it back and repay whatever you borrowed and you kind of capture the difference. So if the prices go up, you will have to buy back at higher prices. But if your prices go down, you will buy back at lower prices, making the money on the spread. So that's shorting. You are betting against the market. Okay. And I think in 2026, it has become increasingly clear that there are like a handful of actual projects with product market fit. But at the same time, like there are many crypto assets that are worth like multiple billions that probably should be traded below like 100 mil or something like that. So there is massive amount of tokens, like overvalued tokens. And that presents an opportunity, I think, especially when these type of markets, when you don't think the upside is immediate, and you also kind of don't wanna buy the dip yet. You think there is still downside, and you're kind of stuck in between in cash or whatever. So if you are into trading, like I personally shorted few stuff in the last couple of days, and that's
Mm-hmm.
how you can make money even when the when market is choppy and you know when prices just keep bleeding. So that's shorting. That's the state of the market. I think that's how you can make money at this stage of the market. It
For
needs to be
sure,
careful
for
because
sure.
it involves leverage, but nonetheless, I think when you know what you're shorting and you have like strong reason to believe that this thing is overvalued, you have this asymmetric risk reward where like if you're wrong and market pumps, you don't lose as much. But if market keeps going down, which is our base case for now, you have like a, more upside in the downside. You know what I mean?
Absolutely, absolutely. And if you were to compare just buying and selling to shorting and longing, we're talking leverage, as you said. Could you expand on what that is? If you can try and give a small, simple example of how it works, as far as you maybe trade with $1,000, but if you do a 2x
Yeah.
leverage, can you dive into that a little bit?
So that requires, so you can't borrow like out of nowhere, right? So you need to post a collateral. So the collateral in majority of perp dexes is USDC for now, and 2x, 3x, 4x leverage. That means, for example, if you have $1,000 in USDC as collateral, if you're using 5x leverage, the most your position can be is like $5,000. So you can short $5,000 of something, okay, with $1,000 if you use 5x leverage. But at the same time, that means you will have like $5,000 exposure to that asset. And if it goes up, you will likely get liquidated quicker, because if you lose $1,000 on the upside, for example, the asset goes up 25%, right? 20%, let's say, and it becomes $6,000, you lost like your whole collateral. So that's tricky.
Mm.
So that's why risk management should be kind of followed. So, um, so that's the thing with leverage. So that's how it works.
Yeah, that makes sense. I believe I got a nice analogy by someone who basically said, look, if you don't own something, but you're confident it's going to go up in value in the longer term, you're essentially borrowing it, which is for the long. And same thing, if you're confident in it going down, you're almost borrowing the funds to do it. Now, could you try and give a really good
Yeah.
examples? And let's try this. Let's do it. Let's do it with bananas.
Yeah.
So let's do an analogy of how longing and shorting works with bananas
Yeah.
as the
Let's say we have like
base.
$1,000 of like box of bananas, right? So for some reason, I think there will be a influx of bananas in the market for some reason. I don't know, new regulations, new whatever. And I know, like for sure, not for sure, I have very high confidence that the price of box of bananas will be $500 in 3 months' time. Okay, so the most logical thing to do if you want to make money, you borrow the box of bananas, sell at today's prices, and after 3 months, you buy back at $500 and pay it back. Bring it back, the box of banana to whoever you borrowed from. So now you made $500 extra because you sold at $1,000 and bought back at $500. So you made like this $500. So you shorted box of bananas essentially.
Mm, absolutely. Yeah. And how does that work in a long?
For long, um, like if you believe, okay, so long, yeah, okay, the same thing, box of bananas. Let's say I expect there will be scarcity of bananas in the market for some reason, and I expect, in 3 months' time, one box of bananas will be like not $1,000 but $2,000. So the most logical thing to do, I need to find as much capital as possible and buy as much banana as possible. Okay, so in this case, I don't borrow the box of bananas. I borrow US dollars or whatever the currency is in the local market, and I use that. For example, um, I borrow $5,000 from my friend and buy
Mm.
bananas with all this money. In 3 months' time, I sell those bananas that I bought for $1,000 for $5,000 or whatever the price is at the moment, and pay back my friend. Okay, and I
Yeah.
just keep the difference. So that's on the long side. So in a sense,
Mm.
when you're longing banana, you are shorting US dollars, and when you
Mhm.
are shorting bananas, you are longing the US dollars. Okay, so that's
Yeah,
how it
that makes
works.
sense. I guess, yeah, the next concept I want to try and break down for people with our banana game is now let's talk leverage. So I have crazy friends who use like 10, 20, whatever leverage they're looking at. And then of course you're looking at like, 1 or 2x. Could you explain in this banana analogy, um, longing versus shorting as far as the leverage side? How does it work? What's the difference between 2x leverage and 10x leverage when you're doing this? On the upside, and then we will talk about what can go wrong.
I think as the position size goes, leverage doesn't matter much because, I can have like a $30,000 position with 2x leverage and with 10x leverage as well. So directional exposure, like capital exposure, will be the same. The only difference with leverage is that how much collateral you need to post to get access to that much capital. For example, again, to borrow $5,000 of, I don't know, bananas, I need to post with 5x leverage. I need to make sure like I have at least $1,000 in collateral. So in case I can't repay when the prices go down or go up, whoever lent that box of bananas to me can, essentially liquidate my collateral.
Yes, so that talks about liquidation. So if you buy bananas and you want to buy $1,000 of bananas, let's say I'm an investor, you're a trader. If we're both looking to long bananas, we both have $1,000. I can go in and say, look, I'm going to buy bananas for $1,000. You can go in and say, I'm going to put $200 in and 5x leverage, and I get the same $1,000 worth of bananas, but I still have $800 as collateral. But as the price of bananas, let's say, goes wrong and it moves down, you almost have an $800 window in which if the price is dropping, your position is going down, your $800 leeway is going down. And if it gets to the point where it goes below that, so I guess you would have a liquidation price is called. So maybe in that case, I'm not sure what the number would be because we're dealing with fictional bananas, but you could lose everything. So the danger is you're putting 200 up front, but you are still risking the downside of losing all of your money.
Yeah.
Whereas for me, worst case scenario, the value of my bananas goes down. So that's the issue. You get more upside with leverage because you don't need to risk as much with the actual investment, let's say, but you're putting your extra capital as the risk in a sense, right?
Yeah, so it's
So yeah.
easier to lose money on leverage if we could like summarize it. Yeah.
Yeah, because how do typically, I guess there is, the simplest way to calculate it would be, let's say if you use 5x leverage for the $1,000 of bananas, you put $200. If you use 10x leverage, you're putting $100. 20x leverage, $50. The question is that $50 is, okay, that's your upfront of what you've put in. How low does the price have to go for you to get liquidated? The more leverage, the less of a move down for you to get wrecked, correct?
Yeah.
But the more leverage you use, the more upside in the smaller moves because you're only putting $50 in, you're still dealing with the $1,000 of capital on 20x, right? So how low does it have to go to get liquidated when you're doing something like 20x leverage versus 2x leverage? Is it 10x the difference?
With like 2x and 20, yeah, the difference is like 10x because let's say with 20x leverage, I can have like $50 and in collateral and $1,000 in actual position, like long and short. So with 20x leverage, just a mere 5% move in the wrong direction can just liquidate all my position. Okay, with like a
Yes.
20x leverage. With 2x leverage, 50%, there has to be 50% move in the opposite direction I'm betting on to get me liquidated. So it's like a massive difference. So the more you leverage you use, the more likely you get liquidated.
Yeah, absolutely. And the opposite works for shorts. Now, if I believe, that bananas are going to go down and I own bananas, I'm going to sell them and look to buy in lower. Essentially, what you're doing with shorting is borrowing you're borrowing money to then go in and short the banana, correct? So we're talking longs. Let's now talk opposite. If we're shorting and we use 20x leverage and we want to short $1,000 worth of bananas, what are you doing? You're putting $50 up
Yeah, with 20x.
to buy the
Yeah,
$1,000 bananas.
You put like essentially in current market because it's like a crypto mostly works, does all the leverage using perps. you don't have to have like, you don't have to do like a borrowing bananas and selling stuff. You can do everything using stablecoins these days. But
Mhm.
like the underlying mechanism and logic behind this and how it works in traditional market is that you would have to borrow bananas. But in fact, here in crypto, you can just use USDC and just keep shorting it. So
Mm.
it's not a big deal. So in both cases, you will need USDC in your wallet to either long or short.
Yeah. Yeah, that makes complete sense. And of course, along the way, whether you're longing or shorting, we will now pivot to focus on shorting because that's what this is all
Yeah.
about. You can close your position at any point on the way down or the way up. So if the market's moving the opposite direction, let's say you've got 2x leverage, you basically get wiped if you hit 50, if the price moves 50% up. But you can close the position at a loss if the price is up 25%. Same way on the way down, if you're looking use 2x leverage, the goal would be for it to drop 50%, for you to basically win the trade in a sense. But you can close if it's down 10%, 20%, break even. So this is interesting. Look, that's essentially the game. And look, it's exciting, but it's also dangerous. And obviously, look, as an investor, sometimes the volatility of the market in crypto alone, we're talking 15, 20% moves in a single day, right? Changes you would never see in traditional finance. So when you're adding leverage to that, you're basically multiplying your amounts. It gets really, really crazy and tricky. And it's not a game for everyone. So, Abror, who is this for? What is the type of guy or person who should even consider this? Because yes, we're going to talk about shorts to place today. We are obviously advocates of trading. That's what we do. We do the market analysis and the market direction all the time. So you can kind of follow us. When we have bearish information on our market direction, people think, oh no, the market's moving down. But a lot of our shorters in the community love it when we say we're bearish in an asset. So yeah, who should do this and who
I
shouldn't?
think shorting and longing is not for newbies and it's not for those who have like um, who just started, to be honest. But though, and I think it's most appropriate for those who can manage themselves, their emotions, and are ready to lose some money because, the nature of the game is that anyone can be wrong from time to time, but as long as you are more right than wrong, you'll keep making money. Okay, so that's the nature of the game. So it is for people who clearly understand that because like and shorting like how do I say, in general markets tend to go up over time, and for to be short you need to have like very good edge. In a sense, you need to have a view that whatever is priced here um is overpriced for some reason, and you need
Yeah,
to have like strong confidence that you are right. Okay, and that's where like you can short. And I think when it comes to trading, like, I posted like, I don't know, 7, 8 trades in Cryptonaries trade, like, while like, in the last a year or two. And I think all my wins were probably shorts, to be honest. We remember
mm,
IP, Bera, layer short, and, I think I shorted IP like 3, 4 times. Um,
yeah, you killed it.
yeah, so it's for those who can time it and understand very deeply why this asset should go down. Okay, so you're essentially
Yeah,
betting against the market, which is like a very brave thing to do. And not many people, like, if I can say, have balls to do that because over time, markets tend to go higher and you're in a statistically disadvantaged position. So if you're shorting something,
yeah.
um,
Yeah, no, that absolutely makes sense. We can discuss basis trades another time. We have a lot of content on that. It's a great way to hedge though, especially when you hold lots of spot positions and you're happy. It's like, okay, great. The market moves up. I'm happy. Fantastic. But if the market's not moving up and my spot positions are down, I'm sad. So at the very least, if I'm shorting, there's a way for me to make money. If I sell stuff, great. Like if I cash out of my Bitcoin now, market moves down, yay, I'm happy. But now I'm questioning, well, when do I re-enter? Because eventually it's going to, it's going to go back up. So I might as well keep my spot positions. So if the market goes up, fantastic. My longs, not longs, my spot is up. Whereas I can take a small amount of capital and play the game and capitalize on these pullbacks. And this is not always the case. Like I wouldn't do this when macro's hot and the market's running and narratives are trending. Then you're being silly and you really should back off. However, in a down market slash a choppy market, this gives you an opportunity to make money. And I know a lot of people will be watching this saying, look, you're being ridiculously basic. Of course, we know what a short is. Of course, we know how to trade. We're doing it, mate. We're using 15x leverage ourselves. But I do think by taking things back to first principles and looking at the basics of what you're doing with a banana analogy, it can kind of humble you as well into saying, oh my goodness, what am I doing? I'm using too much leverage, I'm being silly, or I'm only trading, I've got no spot positions, and that's not right for everyone. But I think you did a tremendous job, bro, of explaining shorting simply. And I do think we can go in and we can start looking at what to short. Before we do, let's set the scene for why we believe it's the right environment for shorts. So, from my perspective, we look at the macro backdrop and it's not healthy. Every signal from a macro perspective points towards the market moving down. It just does. Of course, you get these relief rallies and pumps, which is why you shouldn't use too much leverage because you can get caught offside very easily. We've seen Bitcoin run from low 60s to mid 70s and back and back and back and back. So you can't use too much leverage because these relief rallies will catch you outside. But we are quite convicted in seeing 50s for Bitcoin, maybe $60, $70, $50 for Solana, etc. And for the most part, if these phenomenal assets are still expected to go down because of the macro backdrop, what about this BS
Yeah.
vaporware that we're seeing all over the market? So that's pretty much why we're looking at this right now. If good assets are going to go down because of macro, what on earth is going to happen to the crap? And that's what we'll do today. Abror, any comments on that? Why we're shorting right now? And then let's look at some tokens. Let's upset some people who are fanboys of particular tokens. And that's what we'll focus on. You can absolutely make money shorting Bitcoin, Ethereum, Solana, Hype, etc. But we're not going to talk about that. We want to spend today shorting the crap.
Yeah.
So yeah, bro,
Yeah.
over to you, my man.
Yeah, I think we are due to for some choppy environment, and I think this is the environment where you would want to short. And I believe the assets that I think we'll cover are likely to just bleed on a like higher time frame as well. So that means even if bull run returns, most of the last cycle coins like Arbitrum, Optimism, even when BTC went did new all-time highs, they still bleed down. So I think this is a kind of the case. So that's why like it's a good idea. Like if you're fully in cash, you can look around for these kind of assets and start building a short position. And if you're wrong, and if we are all wrong and new bull market starts, okay, you'll take a loss, but the risk reward was asymmetric and you will make money on other assets, like because there will be new opportunities always in the new bull markets. So I think it's in general good risk to reward. So yeah, with that being said, not financial advice, and
Yeah, not financial advice, and not everyone should be trading. But if you're there right now and you're in some really strong spot positions and you're happy and you're just kind of waiting for the market to move up, this is a good chance to say, you know what, let me get a bit active. Not all of my positions I shouldn't just be in spot for everything. This is an accumulation game, and there are some things to be bought. But if you have a couple $100, you might as well get stuck in. It's a good learning experience too.
yeah,
I was making a video on technical analysis, and I'm not a trader, but I've learned a lot, and it's exciting. And I'm learning about macro even further now beyond what we already have. And there's no better way to learn something than by playing around with it. And you'll probably only start to really appreciate technical analysis and the market direction reports and some of these things when you're in a position where you're looking at charts to say, well, what do I do here? So even if it's not for you, it's still a good learning opportunity. And then you'll start to pay attention to macro more as well, because you will say, okay, well, the Fed's about to speak. Expectations are for them to be hawkish. So I'm in a short. But then they come in and they're dovish and the market moves against you and you're like, oh my goodness, now I understand what macro matters. So it's a great learning experience.
yeah,
Fantastic. So without further ado, let's do this. If you can, let's maybe share a screen let's look at let's have two tabs open. Let's have like CoinGecko and let's have like TradingView or Hyperliquid, whatever you want. And let's look at some of the tokens we're going to short the F out of.
Yeah, I think the Hyperliquid is enough. So one thing I've been watching, this is AVAX. Can you guys see my charts?
Yes.
Okay, you guys can see my chart, right?
Yeah.
Okay. Okay, yeah. So this is what I've been watching. So you see this massive big candle. So first, I never tried to short anything purely because of this technical analysis, right? So like I always wanna see a fundamental reason to short any asset. For example, whether it was layer IP, for me it was like a ridiculous asset that shouldn't be traded in like billion-dollar valuations. So here we have AVAX. So we'll start from the fundamentals. I think it's a ghost chain. It's becoming a ghost chain. If you look at the metrics, like fees that they're generating, the TVL, everything is trending down, and the fees are so negligible that it's currently trading at like close to 2000 X when you look at the PE ratio. This is ridiculous. Okay, so for comparison, Hyperliquid trades at like 40x or like 38 or something like that. Ethereum trades at like 200x, right? What on earth AVAX has that it deserves such a big premium? Okay, and I think markets are slow, and there is a lot of that dead capital, that liquidity locked in that ecosystem. So that's why it's kind of slow. Okay, so that's the first thing. That's the fundamental reason to short it. The second reason to short it is again like macro backdrop. We are kind of our base case that BTC will go lower because it's like back into the range and probably we'll see like lower 60s. So that's the second reason. And the third reason is the chart of AVAX itself. So this is where technical analysis comes. So you see the uptrend has been broken. There was a resistance there and it rejected hard from there. So ideally you would want this to close around here, retest the uptrend, and this is where you enter, maybe like close to like $9.30 or something like that. And this is where you start building your position and you target all the way to like 7.5 and lower. Okay. So this is essentially what I'm looking at. So it looks
Mhm.
like on a downtrend because you have like lower high.
Yeah.
I mean, you have like one high and the second high is like a lower high. Unless something dramatic happens in the next like 24, 48 hours that it just reverses out of nowhere. So the base case is that it will continue lower. So these are three levels of analysis I use to short. So it's never just
Yeah.
purely technical, never purely fundamental, never purely macro. So if I'm wrong on macro, there are other reasons still to be short this asset because fundamentally it's overvalued.
Yeah.
Okay.
Yeah, absolutely. Absolutely. I will say this, and the kind of argument against this is look, fundamentals, unfortunately, the market doesn't always absorb them. And we know AVAX is one of those tokens that look, it was there for a season and it's not coming back, guys. It's just not. I liked AVAX back in the day. There's a Bruce, it's a ghost chain, the fees don't make sense. It's not going to hit 20x. It's not hitting all-time high, fundamentally anyway. But you never know because when the market starts to swing and macro backdrop does improve, or a narrative picks up, or people look to play the rotation game, naturally they're going to be scrolling through Coinbase and see, oh, what's this token? Oh, wow, it's $10. I can buy 1,000 of those coins instead of zero point 0.1 Bitcoin. And people will come in and buy these assets like AVAX, even though it's pretty shit. So that's where you need to look beyond the macro and you need to look beyond the fundamentals because sometimes they don't matter
Yeah.
because naturally it's just money. Money flows into these things. That's what keeps 99% of tokens afloat. They're not fundamentally sound. They're just propped up because macro is doing okay and because there's liquidity in the markets. But that's why Abror said the last piece of the puzzle here, especially when markets, are in this choppy period where you are getting these relief rallies, the technicals have to line up too. Because right now, you can have a lot of people who could come here as a trader and they don't give a monkeys about AVAX, but they're like, oh, I can buy in here because there's going to be a relief rally. and things will move. So yeah, you have to have that kind of confluence of the macro backdrop being shit, which is yes, the fundamentals being shit, yes, and the technicals slash the charts here looking quite weak. But yeah, that makes sense, Abror. That's a short on AVAX. My question is, how do you now choose the leverage you're going to use, and when do you set like a stop loss? How long are you looking to be in the position for? Talk to us about that. What's the logic there? Now, I know you're a Deca millionaire, so it's a bit different to the average guy, but still, let's share some logic on how someone could say, okay, I'm ready to short. I'm happy to. What leverage do I use? And how much money can I make by using X amount of dollars right now? Share with us.
Yeah, so I won't start from the leverage. I will start with the position sizing, okay? Because I think there is a misconception that a higher leverage by default means like higher risk, but it's not necessarily true because that depends on the overall position sizing. You can have a $10,000 position, if your portfolio, let's say $1 million, let's say you can have like $10,000 position with like 10x leverage and 5x leverage. Directionally, your exposure is still $10,000. So regardless whether you use 10x, 5x, 2x, the only thing is that when you use higher leverage, you need to post less collateral. Okay, so that's the only and you can liquidate your collateral can be liquidated faster. But in terms of losses, both positions will have same dollar amount losses, whether you use 5x leverage, 10x leverage, or 2x leverage. So I want to make that clear because there is a misconception. So what matters is position sizing. How much of my short, relative to my overall portfolio. Okay, that's important. So I generally don't go over 5%, never. Okay, so max I can lose my position sizing. If I have a, let's say, $100,000 portfolio, the most I trade with is like single position should be around like 5-6K only. Okay, otherwise you will have like being overexposed to a single trade.
Yeah. And would you say that's across all of your shorts? Definitely not just one. That's like if you're taking 10 trades, that would be over 10 different positions, right?
Yeah,
You wouldn't say 5K into one short.
yeah, roughly like five. Like it can depend. I'm like it's a general how do I say, rule of thumb that I follow. Like obviously it can be 6K or 7K, but it's definitely not 50K. If I have like a
Yeah, absolutely. Absolutely. But let's say it's 5K. Let's say you got $100,000 to your name. You've got 5K in. Are you going and putting 1,000 into the position with 5x leverage? Or are you putting 5K in with 5x leverage? What are you doing? Because you don't want to put the collateral total will add up to the 5% in this case, right? So you'd put 5K into your shorting part, let's say, and your positions, if you're using 5x leverage, would be $1,000 positions,
yeah, if
correct?
I'm posting 5K in collateral and my position is just 5K, I will just use 1x leverage. Okay. So I generally use like 2 to 3x leverage. But you can pretty much use 5x leverage, but you will need to post more collateral because your liquidation will get closer. So it also depends what you're doing with the rest of your portfolio. For example, if 90K of my portfolio is earning yield, if I take 5K by increasing the leverage, I'll have to provide more collateral, right? So that 5K won't be generating any return. Otherwise, I would have been farming the yield.
Yeah,
So
absolutely.
I use 2-3x leverage as a rule of thumb, but again, you need to have a clear reason why you're using like 10x leverage compared to like 3x leverage. If you have capital, there is
Yeah.
no need for 10x leverage, to be honest. Like,
Is this just greed?
yeah,
Is it
greed.
just greed? Is it because yeah, like let's go over some of the mechanics
Like,
there. If we both have let me shoot and then I'll let you let go for it. Let's say me and you both have $1,000 that we're both willing to lose. It's not an issue. We've got $100,000 portfolio. 1K is not going to be an issue for either of us. What we're saying is we both look at AVAX, we both think it's going to go down, we both can dive in. I want to go in and use 2x leverage. I can lose $1,000. I use 2x leverage. I put $500 in, I put 500 in my collateral. You go in and you are a greedy MF and you're like, well, I'm going to use 10x leverage. I'm only putting in $100. If we're both correct and the short goes through and AVAX comes and pulls down 50%, right? How much money am I making? How much money are you
We are both
making?
making same amount of money, but relative to my
Exactly.
$100, I made 400x. Okay, because I increased my portfolio by 5x. Okay, but on a
Yeah.
percentage basis, you made, I don't know, like 50%. That would be 50%. So there is a difference. Okay, but in a dollar amount, since we both had $1,000 short, we both made same amount of money. Um,
Yeah, exactly. That's all I was trying to get to, which is this very eye-opening because there's definitely a misconception out there that the more leverage you use, the more upside you're dealing with. But only if you're broke. If all you've got to your name is $50, sure, go for it. If you really want to risk it, if you want to use 20x leverage because all you have is $20 and you basically got $1,000 window there, like, okay, cool, go for big leverage. But if you're playing a game and you're a trader or you're an investor and you're experimenting, stay away from the leverage. I don't know why you would take so much pride in, I got a 20x and made $500 versus I used 2x and I made $500. Money's money at the end of the day. So yeah, I get why people use a lot of leverage, but I think it just causes extra anxiety. And especially in the learning stages, just skip out. There's no need. There's no need. But on the long side, Abror, then there's how would that work if we were longing? It's the same concept, right? You're just risking less for the same kind of return. But I guess on the longing side, if someone really wants to go crazy with the amount of money they've got, you see a lot of guys who will kind of full port along, and that usually ends out quite bad. But you can also get disgustingly rich doing that,
yeah,
right?
correct.
So that's why people do that. So yeah, but on the shorts, basically, so you said 2-3x leverage is the max you use,
Yeah,
and about 5% of your portfolio is what you allocate
yeah,
to
total
shorting.
sizing, like position sizing, like roughly 5,
Okay,
6%.
yeah. And if you were getting into the game now, let's say you're me, obviously I have a lot of experience in crypto. I have the awareness to say, yeah, some of these tokens are crap. Macro backdrop is no good. A lot of these assets are crap fundamentally. I understand there are relief rallies on the table, but I agree overall with Cryptonary's thesis that this is a good opportunity to keep throwing shorts in. Where would you begin? Would you use any leverage, or would you just start placing some shorts to get familiar with these dexes, to get familiar with how it works? What would you
I
recommend to
think if you're
begin?
new, you need to spend at least 1 year just losing money and treat it as tuition fee. So I would just try it, everything like, spot, buy and sell, try meme coins, try perps options. So I traded options and I did it just because I wanted to learn what they are and how they like what is the use case of them, when to use, when not to use, and all this stuff. Even though like I don't trade options these days, but at least like I've tried, I know how these
Yeah.
things work.
Give us a bit of a lowdown on options.
Um, Options are a bit complicated compared to perps, because
Try again with bananas, my man. Try again with
uh,
bananas. This is a real test. Abror, guys, if you're new here, Abror's head of research. Abror's the main guy here. Let's see if he can explain options with bananas.
yeah, options are essentially, let's say, uh, a call option. So there are two types of options: call option
Yeah.
and put option. So call option, what is it? So in case of bananas, um, buying a call option with a strike price $1,000, let's say, okay, you have a strike price in call options, gives me the right to buy bananas at $1,000, but not an obligation. Gives me the right, but not the obligation to buy bananas at $1,000. So what's that mean? Why it's useful? Imagine I have an information, again, there is a scarcity of bananas in like 6 months. right? And I know that I have inside information or whatever information my research says, like bananas will be scarce in like 6 months. So what I do is that I come to you and say, hey, I want to have a contract with you. I want to have a contract that says I have a right to buy banana at today's prices in 6 months time, but I'm not
Mm.
obliged to buy, but I will have a right. And you might ask, like, why would I do that? You know, it's not beneficial to me, and I will need to take premium to do that. Okay. So as a banana holder, you will say, okay, if I'm giving you this right, I need to get something in exchange. And that something is like kind of like a commission. We call it options premium. So for you, it's a way to generate yield on your banana holdings, you know, because
Mm.
if the price of banana doesn't go super high in the coming month, you will just keep getting free money from me. But for me, if my research is right, that means I will have an option to buy banana from you for $1,000 while the actual price of bananas $5,000. So I buy for $1,000, sell it for $5,000, I pocket $4,000 in different. So that's options. Okay. So they give
Yeah.
the options holder a right, but not obligation to buy the asset at specific price.
That makes sense. We were speaking to a member of Inner Circle, and he was doing something like this. And I recall over dinner him saying, "Yeah, every time Bitcoin hits, 70K, I make 15K." And he said it's Patek money. So is that what we're talking about here? Was this slightly different? Could
Yeah,
you
yeah, yeah.
explain that?
So what he is doing, he's a banana holder here, and he's happy to sell bananas at like 70, 71K. You know, he will miss the upside if banana goes like, you know, to 200K overnight, but he doesn't see it going that high, okay? Because, you know, they also do the research, the analysis, and they're happy to exit that specific price. And they start selling
Yeah.
these options. They will say, hey, whoever wants to buy the option from me, you have to pay me premium. And if you're right, I'll sell you BTC at cheaper prices than the market price. But if you're not right, you'll keep paying commission, like premium to me.
Yeah.
So this is what he's doing. He's selling call options. It's called covered call options because he has BTC stack already. And that's
Mm.
the way to generate yield. He's selling options to someone and
Yeah.
collecting
No, it
premiums.
makes a lot of sense. Yeah, and I guess if you're looking for yield, that is definitely an option. A lot of people, look, you are just better off buying some spot positions. And if anything, maybe not on Bitcoin because the liquidity is not there. But if you're holding stuff like Ethereum, Solana, Hype, etc., if you want to earn yield, maybe you just dive into CLPs or something like this. If you just want to sit there, you're happy with your regular positions, just buy and hold. Maybe with stuff like Solana, Ethereum, you can stake and earn a few percent. But I definitely think there's room here if you want to be more active in shorting. And we can definitely dive a bit deeper into the options stuff and do a dedicated. We did a piece on it actually already, I think last week. We are hesitant to really dive deep into some of this stuff as it can become quite degenerate and gambly. Same thing with shorting, which is something we usually keep around for this The Traders channel. But we will dive into these areas. It's a big opportunity and a great learning experience, first and foremost. But yes, Abror, let's do this. Let's go over. So we're definitely going to short AVAX. Let's go over two more
Yeah.
tokens that we would short, and we're not going to share specific levels for stop losses or when we close the position. Everyone is different, but yeah, we'll do two more. So yeah, I see dots. Oh goodness, let's see. And please don't tell me the last one's Ada, because then I could have predicted
Ada.
this.
Okay.
Yeah. Okay, cool.
Yeah.
Let's dive on dot.
So this is dot Polkadot, the same thesis as Avalanche, like fundamental story, the same fundamental story. It's a ghost chain. Like no one is using it. The design was interesting a couple of years ago because it was promising, but market didn't adopt their tech essentially. And it's kind of like no one is using these chains, and that's why but they are still valued at like multiple billions. So there is a lot of that liquidity there. So, and I think over time, these assets will trend to zero, like not literal zero, but you know what I mean? It will just keep bleeding out.
Yeah, multiple cycles. They're probably going to get every time there's a relief rally. on Bitcoin or macro improves, you'll see these things come up, but cycle to cycle, they just won't move up as much. And whenever things do go bad, they will pull back harder. It's almost, I'm not a TA guy, but it's when the guys say like lower highs and lower lows in a sense, you know. It's zoomed out, of course, but naturally these things will bleed over time, and just capitalize during these bears. But what in particular on this chart, Abror, are you seeing? Because I would say this: if we believe everything's going down, if Bitcoin's going down, if hype's going down, etc. Now, the reason we wouldn't want to short them necessarily is there's a lot of value there,
Mm.
and they could really rip up when things go brisk on, and on these relief rallies. But why, for example, if you had to pick between shorting AVAX or DOT, macro story aligns for the same thing. Fundamentals, same thing. Why would someone choose today to short AVAX over DOT or vice versa? What are you seeing on the chart?
I think Dot's chart is weaker, like way weaker to be honest, because at least when you look at the AVAX, and I don't know, it's more almost like an art at this point because you will need a lot of experience to see where the strengths and weaknesses. But if you look at these, relief rallies, and the reactions, they are very weak. So there is no demand whatsoever. Compared to, for example, let's do the comparison, right? Okay, just pay attention to this part. Let me draw it. Okay, let's say this part. Okay, you see no demand here and just sell off. But if you look at AVAX, there was at least some demand there. You see, here, here you see this little bit of demand there, which dot chart doesn't have. So that means like there is absolutely no one bidding dot. So it just shows me that the asset is weak, and as a rule of thumb, you need to be longing strength and shorting weakness. Okay, so this is the chart of dot. I think it looks incredibly weak. If you even like zoom out on the weekly or monthly, it just keeps making lower highs, lower lows, lower highs, lower lows. Yeah, this is the chart. It
Mm.
just trends. Oh, this looks horrible. Like if you really look at it, it's like a leading to zero kind of thing. All the way from $75. I can't believe it traded at 75 at some point. You know,
Euphoria.
yeah,
Euphoria trend. I would say with DOT, it was never a cryptonary pick, but we actually got into something called the parachains very early,
yeah,
which was, I'll get this right. Basically on Polkadot, they had like these they're like layer zeros basically.
yeah,
That they were like layer, like almost like L2s. They were like blockchains built on top of DOT, and it would use DOT's underlying security. And what would happen is they'd basically do almost fundraising rounds where you could go in and put capital into backing one of these chains, and they would select them a few at a time, like I think every couple of months. And if you chose to put your capital into one of these and you got in, you basically got a big kind of reward. And it was like an early kind of airdrop, like
yeah, yeah. I
arbitrage
remember. Yeah,
opportunities. Very interesting. Yeah. It was called the Giga Brain Play that we published at Cryptonary. So yeah, it served a purpose, and that's when Euphoria was sky high.
yeah,
But yeah, we're not going to recapture those. You will get other assets that are similar, where they're pretty crap, but they get mind share and they pump. But abroad, I'll be honest with you, I think some of these days are over. I don't see how you're going to get tens and hundreds of projects hit the $1 billion mark, because I feel the market's getting a lot smarter.
yeah,
And I don't see how many other dots are going to come up. The year 2020, 2021, everyone trying to be, the utility company. I don't see these things happening again. So it's
yeah.
very
You
interesting
know
to look
what
back.
it reminds me? It reminds me the AVAX chart, but AVAX chart is currently around
Mm.
here, and I'll show you. So I think there is massive, another like 50% or 70% drawdown to be seen on AVAX. So if you zoom out on a weekly chart, so yeah, you see there is like massive range here and here. So it's trading in a range and it's losing this range for the first time in the last like 5-6 years. And the same thing happened to DOT before it actually bleeded down. You see this range. So it kind of broke this range and just bled down. The good thing about shorting as well is that if the asset is down already 90%, it can go down another 90%. So it's not like, so for example, if on the upside, on the long side, if the asset is up like, 100%, the next 100% is less likely. You know what I mean? So like
Yeah,
you say it's already run. But if you missed on the shorting side, if the asset is already down 90%, it can go down another 90%.
absolutely, absolutely. It's one of those things. Yeah, learn it the hard way in a couple of ways too.
Yeah, yeah, yeah,
So
yeah, yeah. Yeah, I
yeah,
see what you
let's
mean.
do that's AVAX, that's DOT, and I found it very interesting how, like you said, DOT is similar to AVAX, it's just in a different point of the
Yeah.
chart. Is there a third token we can look at that perhaps is at a slightly different stage to AVAX and DOT,
Sorry?
but it's in the same? Well, is there another asset we can look at now, the third one for the stream, where, as you said, DOT is like AVAX. Every principle we've said for AVAX applies for DOT. Fundamentals, macro, technicals, all crap. But AVAX is in a slightly different position of the chart.
Yeah.
Um, can we look at one more that's in a slightly different position?
We can look at Link, but I think Link is fundamentally slightly different because it's being
Yeah.
used. Um, but I think it's also a very good candidate for short. But I wouldn't short like more aggressively compared to like DOT or AVAX. But it also looks like it broke the uptrend, similar to what AVAX did. You see, it's like the same
Mm.
chart. So if BTC moves lower, I think this will move lower as well. So this is a good chart. But again, I have a rule like, why would you invest in your second or third best idea? You would rather like you better investing like betting on your first best idea. So I wouldn't go heavy on Link as well. I would just stick to like AVAX and DOT because the charts are much more clear. But again, the Link looks the same story, like looks like same as AVAX to be honest. Lower high, lower
Yeah.
low, broke the uptrend. If it closes, it's gonna be good short all the way to like $7. Um,
Yeah.
yeah, and we can go.
What's your take, Abror? Yeah, what's your take on still in this market, shorting some of these nonsense meme coins? I don't know how many
Yeah,
meme coins are
I'm
actually
actually
available for
looking at
shorting. It
Pepe. I was
depends.
like, it's actually on
Yeah.
my watch list as well. I think it makes sense. Look, the chart looks horrible, to be honest. Yeah, it broke the range here, I believe. Yeah, so there is still all the way down to here. Sorry for my bad drawing, but roughly, right, rough idea is that it broke the range. It is being sold off, continuously making higher low, higher low, higher low, higher low. BTC is downtrending, and memes are kind of subdued in a sense. So I think this is also a good short. But I missed my entry. I wanted to short somewhere here during the recent rally, but I kind of missed it. And I don't want to overtrade because I already had like AVAX and DOT shorts. Um, but also I think memes are good shorts, to be honest, in this environment.
Yeah.
But need to be careful
Yeah.
because they're very reflexive. On the way up, they absolutely smash it. So it's gonna be costly when it comes to memes.
Yeah. Yeah. Abroad is when we just circling back, I've seen guys who are in positions where they're getting absolutely blasted, whether they're longing something and the market's really going against them, or vice versa, and they can add to their position. Is this just them adding more stables to their collateral? Is that what they're doing when they're just trying to let it keep swinging, swinging, swinging without getting liquidated? You can just add more
Yeah,
collateral. Is that
they
correct?
add more collateral and that moves the liquidation price. But that also means your potential loss increases as well because you can lose more collateral. So if I have $50 in collateral, all I can lose is $50 because when I get liquidated, I lose like $50, all of it. But for example, if the
Hmm.
trade didn't go in the direction I wanted to go, and I post another $50 collateral, and the trade keeps going the wrong way, I end up losing $100 instead of $50 if I keep adding. But
Yeah,
obviously, the price would have to go much lower. But still, like you're increasing your risk by adding even more collateral.
yeah. That makes sense. That makes sense. I have a question for you, I guess, before we kind of round this off. Could you show me some examples of maybe alts that you wouldn't short right now? That aren't, it's not about the fundamentals, it's not about macro, but are there any alts out there that you're like, you know what, I just wouldn't short it, even though the greater theses of macro being crap and this thing isn't fundamentally sound, I wouldn't short it because of the chart. Can you show us one of those?
Yeah, Tao showing strengths. I know a lot of analysts and researchers, like some traders are shorting Tower because it performed so well, even though fundamentally it's crap. But for me, again, these three layers of analysis, I need to show the weakness in the chart as well, or have like a very strong fundamental reason to actually short the strength, right? I wouldn't short Tower, for example, because it's showing strengths. And if you remember, in the last, I think 2 weeks or 3 weeks ago, I think people can check. It's like timestamp. When I said like, oh, it's better to long, my drawings are still there. The price was here, like around 200, 208, and it's on the YouTube, I believe it's recorded. So it's actually played out as I expected. So it broke out. Um, But I wouldn't short. Many people are kind of shorting it,
Yeah.
but you can see from the funding as well, it's negative. That means a lot of people are shorting it. So
Oh yeah, let's do that quickly too. Let's talk for anyone who's completely new, funding rates and open interest. Can we quickly touch on those two terms?
um, so funding rate is used to bring the price to balance, essentially. So the way markets bring the price to balance, they say, hey, if the price deviates from the Oracle price, let's say Oracle price is $100, but the market price is 120 in the perp markets, that means there are more longs than shorts because relative to actual market, right? In the not in a spot market. So the way perp markets balance that out, they say if it deviates from the Oracle price, that means
Mm.
longs need to pay more to shorts, and that in turn would kind of incentivize longs to close their positions because every hour time works against them. Okay, so they will need to close their
Yeah.
position to bring the to stop kind of paying the shorts. Okay. At the same time, on the short side, if there are a lot of longs paying shorts, there is more reason for you to go short because you will get paid for being short, right? So even if the market moves against you, you can hedge somewhere using like your spot position, but still short it,
Yeah.
and then you will get paid by longs. That's called basis trade, by the
Basis
way.
trade.
Yeah,
Basis trade.
yeah,
Yeah.
yeah, yeah.
Cheat code. But basis trades work in particular markets, right? They're more for bull markets, not bear markets,
Yeah,
correct?
they
Or is the
are for
opposite?
bull markets
Yeah.
when longs are overpaying shorts. Yeah.
Mm.
So in this
Yeah.
environment, in
No,
this
very
Taos
interesting.
case, this wouldn't work because um, shorts are paying longs here. So there's no way for you to hedge like using spot market. So in this case, if you want to earn yield, you would be longing the asset because shorts are paying to you. And the reason shorts are paying to you is because it deviated below the Oracle price. And that's why the perp market is trying to restore the balance, bring the price back to Oracle price. So that's how it works. I know it sounds complicated, but it's a bit easy. Um, yeah. So that's essentially the
Yeah, no, it's
funding
very,
rate. So yeah.
yeah, no, this is very interesting. Bro, is there any final comments you want to make regarding, the shorting, this stream in of itself? That's what it was for, like getting people up to speed.
Oh,
They
let
don't know what shorting is, this is what it is, how it works, etc. We've given a couple of tokens that we said we should short. So now what? How do you want to wrap up this stream? We can touch on other things too. But yeah, let's wrap up this section.
Yeah, I think it's already down like 2-3% since the start of the stream.
Stream?
Yeah, it was like $9.70, $9.04. So would have been good trade regardless.
So how much money did you make, Abror, on your $100,000 short?
$100,000. Um my position wasn't $100,000, but I've made like, nice so far. But
Okay. Okay.
I kind of chickened out a little bit. Had to reduce my position like last night because it was like mentally, how do I say, not painful, but like it was taking my mental energy, and I don't want it to take my mental energy time.
Yeah. Was that because it was climbing quite close to your
No,
liquidation
no, no.
price?
My liquidation price was like all the way, like even if it goes to $100, 10x's, my liquidation price wouldn't be there. But
Okay. So why was it causing you mental strain then?
I think it's the ego thing. That's why like sometimes you have to have like personal thing. I didn't want to be wrong on this one for some reason.
Mm,
And I had a lot of work to do,
yeah.
and I didn't want to be stressed about it being wrong or like the need to manage my position and stuff like that. So I kind of, okay. And I risk around like 6-7% of my portfolio, like total position sizing. So it was decent, like decent position. Like, like if I held, it would be like,
Yeah.
I don't know, I could have moved out to a very, very nice place, for a year or two.
Yeah. No, this is good. This is good. I think you covered this perfectly. I think after this, guys, you can go short AVAX, you can short Dart, maybe short some of the memes. When there's no key level to necessarily share, I guess, here. However, bro, could we do this now? There's a lot of people who maybe aren't overly familiar with the Cryptonary product. Could you go and look at, let's say, yesterday's market direction report and kind of show the guys what we're looking at so they can better utilize some of these if they were to come in? They're not going to short these assets that we're going to go over, but they can get a better feel for how to use that product of ours. So yeah.
Okay, so we have, let me share my screen then. Stop. Share my screen. Okay. Yeah, I think this is the market direction we posted. So as you can see, we have levels for Solana. We didn't cover AVAX in our market direction report because it's not one of our cryptonary assets. But we covered Solana. We give a take. For example, yesterday Solana was showing relative strength. However, structure remains range bound, and I think in here we highlighted that it was pressing against its downtrend and resistance as well. So the odds were to the downside.
Yeah. What about the market direction tool? As we have a lot of alts on there. Now we don't update these every other day like we do with
Yeah.
the main market direction. But if we pull up the tool, perhaps we can see what some of these alts are doing.
Yeah.
Now, for the record, guys, this is written by one of our other analysts, so we can't confirm he feels exactly the same as Abror right now. But let's see what he's feeling bearish towards. Because if he's feeling bearish towards something, that's basically a sign that yes, there's a short on the table here.
Okay, let me quickly check. I think I got locked out from the cryptonary.
Hmm.
I need to log in.
Let me see. Maybe I can get in quickly
Yeah.
and take over.
Because it's connected to my separate phone. I have two phones, if you remember.
Why do you have two phones? That's a bit odd.
Yeah. But I think we posted on the Discord as well. I remember Kushal posting it. I just need to find it. Pretty crazy.
I was joking, by the way. I understand why you have two phones. Guys, Abror moved to the UK and he watched a lot of TikToks about how dangerous the UK is.
Yeah.
So he went in. I'll actually show the tool, bro. It probably is good. Let me share my screen, although most assets say neutral right now. So yeah, let me share my screen. Share. Okay, cool. So you guys can probably come and see some of these. Now, Kushal is currently neutral on a lot of these things, bullish on a couple of assets. But we're probably going to come in, bro, and we should probably update some of these. Some of them,
like
it's been like
2
over. It
weeks.
says
2 weeks, yeah, 2 weeks done.
yeah, so we need to come in and we need to update these, as I would say right now, we're probably feeling very bearish in some of these, and it could highlight some of the shorts. I think you're definitely going to want to short either. I wouldn't short Link, it's still one of our picks. I look at something like Farcoin and be very, very hesitant to expect any upside from some of these memes. There are a lot of short potential here. Abror, please coordinate with Kushal and just update this. But you guys get a better idea of how this works. If we say bearish and our downside target is quite low, it's a very clear short. So we don't do signals with Cryptonary, but you can definitely come in and see how we're trading when you come in and look at these the market direction tool.
Yeah.
Excellent. Bro, anything else you would like to talk about? I'm not sure, guys. If you have any questions or any comments, drop them in the
Someone is
chat,
asking,
whether that be in the Discord
can
channel
I do 200x
or on
short on
YouTube.
AVAX? Oh my God. I mean, if you want to lose all your trading
250x.
account, go ahead, be my guest. But, 2 to 3x leverage is all right. 250.
Yeah, there's no need. It's just pure greed. There's no need to do that unless you're completely broke and you're taking a punt. I mean, you might as well jump on Polymarket. I actually am dropping a video. It's 5 ways to make money with Polymarket without gambling. And that's going to come out later today, hopefully. I think it's going to be a great video. So yeah, I might push it on Saturday so it gets more attention. But if you're going to play around with 200x leverage, just go on Polymarket.
Yeah.
So yeah.
Yeah. Polymarket
Bro.
memes, perps. Yeah.
Yeah, this is very good. Bro, this was fantastic. I really enjoyed the stream. I'm not seeing any questions that we didn't already address earlier in the stream. So thank you very much. Appreciate it. And yeah, guys, if you're seeing this, you're not a C Pro member, join C Pro. Guys, if you are a C Pro member and you're dealing with larger capital and you really want to get stuck in and work with us directly on this stuff and look at some trades that you could potentially enter, let's look at your current position and see if you have some short opportunities that are right there and right for you that you can check out in a circle. And yeah, Johns, take us away, my man. Thank you guys. Appreciate it. Bye-bye.